We're about an hour and a half before the open on Thursday, January 6th. Hello, traders. I hope your new year is off to a great start. Boy, we've got to start with our last two picks because every single video I like to start out with my previous picks. I like to show you how they played out so that you can gain confidence in the system. This is not some photoshopped P&L. This is not cherry picking. You saw these trades yourself. I posted the video. You got to see how the stock reacted. You got to see the reasons that I like that stock. So let's take a look at Tesla. That was the last video that I did 2 days ago, right in here. You could see the stock opened on its low, closed on its high. Let's go into Tuesday's price action so that we can see what Tesla did. Had a beautiful daily chart. We had a bullish flag pattern with a breakout to a new all-time high. Video came out about 2 hours after the open, and there it went. Don't take my word for it. There were viewers who posted comments in that video. Please go back and watch the videos. Make sure that what I'm telling you today is actually true. You can go back and you can verify it. Tesla, fantastic pick. Look at the money that was made on that stock. I also had another pick of the day that day, and it was Apple. I loved Apple. Looked really good. Doesn't look so good yesterday, but it looked really good on Tuesday, and we are focusing on shorter term day trades and not swing trades, and I'm going to get into that as well. There's your rally up on the open. Apple, look what it did through the course of the day. Beautiful rally. Lots of money to be made on Apple. Tuesday, stock has this resistance right here. It is challenging that resistance. A little bit of a downtrend here. Bullish flag formation, continuing to push higher on heavy volume. Those are key components. Market also was looking pretty decent. So Apple did great. Tesla did great. Let's take a look at the market. The S&P 500 right in here. I was telling you, please go back and verify. Tiny compressed little candles on light volume, holiday trading. This float higher was all on light volume. What do we know about that situation? We know that typically the market sells off and we've got profit taking when we see that pattern. Ah, come on. How do you know that? Because I go back and I look. Nice little rally. Tiny candles, low volume. Drop. New high. Tiny candles. Drop. Light volume. Tiny candles. Drop. You see the pattern? Same thing here. Drop. So we knew that we were setting up for a decline. Tiny candles, light volume rally, new all-time high, drop. Same thing here. We were set up for this move. Now, I've been telling you on a swing trading basis, do not swing trade. Why? This was your last window of opportunity, and this was your last window of opportunity. And I was very vocal about it when I did those videos. This is where you want to sell bullish put spreads. This is where you want to sell bullish put spreads. This is where you want to sell bullish put spreads. This is not where you want to sell bullish put spreads. I believe the market's going to come in and test the 50-day moving average, and there is a chance that it tests the 100-day moving average. We know that when it comes in and tests these major moving averages, it does not spend a lot of time there. 1 or 2 days, 1 or 2 days, see ya, see ya, see ya. Once that support is in, you better be ready to pull the trigger here. A couple days, off to the races. Now, the character of the market's changing a little bit right now. We'll go into that. This is one of the most prolonged sell-offs that we've seen in the last year. And then we get into a bullish part of the year. This is November and December. This is when buyers are super aggressive. They want to mark their portfolios on the high of the year. So when you don't get a big market rally into year end, it is a tell. Just like it's a tell when you have a stock with relative strength. Market down, 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 stock up, 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 that is a tell that institutions are in buying that stock and that the stock is going to race higher as soon as the market finds support. Well, when you don't get a big year-end rally out of the market, it tells you there's a lot of resistance building. This is not particularly strong price action. Plus, we float higher, compression, compression, compression. We were just bound to have this drop, and we got it yesterday on a news event. So we're waiting, waiting, waiting for those dips. And this is just not something I'm blathering. I prove it to you. I post my comments every single day before the open. And guess what? They're free. They're free. You can get the link in the description of this video. You've got to set up your market bias before the open on a longer term basis and a shorter term basis. So we're going to scroll back. This is what I had to say on Tuesday. Swing traders, Happy New Year. Hey, your bullish put spreads that we put on a couple weeks ago, they are melting away. That's fantastic. I believe we will see a market dip in the next week or two, and you will have a chance to reload. I can't make it any more clear than that. S&P drop to the 50-day moving average would be a level to initiate your bullish put spreads. Why? Because we may not spend much time there and we may shoot higher even after just a day or two. So get maybe a third of your bullish put spreads off. Remember, the strategy distances us from the action anyway, so we're looking for stocks with relative strength, and we're still selling those bullish put spreads way out of the money. So we've got cushion and we have time decay working in our favor. Now, if the market bounces off the 50-day moving average and it runs higher, no problem. I've got a third of my bullish put spreads on. I'm going to make some money. Cool. I'm good with that. But if the market pulls back to the 100-day moving average, that is where we want to get more aggressive, but we don't want to do it right away. So let me pull this away from you so we can focus on that swing trade, because that's what we're going to be looking at today. So the market pulls back and it tests the 50-day moving average, spends maybe a day or two there, and then whoosh, another drop. Okay, well, we do not want to be selling bullish put spreads as we're coming down and coming down and coming down. Yes, option implied volatilities are going to be higher, but what if it continues to go down to the 200-day moving average? We've got a Fed that is tightening. So we need to be very, very careful. Instead, what we're going to do is we're going to wait for that 100-day moving average to be tested all the way down. We're going to be looking for those stocks with relative strength, stocks in the upper right-hand corner of the daily chart. Once you get that low, okay, there's a bullish hammer off the 100-day moving average. Now we get a gap up, and this day you could see was going to be a trend day early on. This is where you want to be aggressively hammering out those bullish put spreads that you found. Then you just sit back, let the market float higher. Tick, 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 tick. Time decay. Then you wait for your next dip. That's how you should be trading right now. Market sell-off, support, selling bullish put spreads. Another retest, okay, sell some more. Off to the races. Once you've got that confirmed support, and you can see if you scroll back, these dips don't last very long. I suspect that dips this year are going to last longer, because we have a Fed that is tightening. So they don't last long. You got to be ready to act. Get those bullish put spreads off. You should have them ready. And I'm going to show you a couple of stocks that fit the profile of what I would be looking for. There's something else that we have to look at when you're trying to determine how far could the market sell off. Yesterday we had a market drop. And before I get into that, let's get back to this statement. Market context is so important. It's why I spend every video on the market. This is 60% of the equation, folks. 60%. If you get this piece wrong, you will lose money. That's it. There's no question about it. So you need to put a lot of time and effort into this. Yesterday, you should have known that there was an FOMC minute that's going to be released in the afternoon. These are comments from Tuesday. Day traders should not chase the opening gap up today. Gaps up to a new high have been faded. We need to be patient. Spend your time watching the market during the first 30 to 45 minutes. Oh, okay. So let's go back. Let's take a look at what the market did. And this will be the price action from Tuesday. I incidentally gave the same advice to my members yesterday. Don't chase opening gaps higher. Whoosh. And on Tuesday, here we go, here we go. Oh, the market's at a new all-time high. Oh my God. Uh-oh. Sadness. I should have waited. I should have been more patient. There goes my New Year's resolution. Oh, I'm already losing money. Don't be that guy. Be patient. Wait for your trades to set up. If you waited on Tuesday, drop, double bottom, higher low, downward sloping trend line, breach to the upside, buy signal, bullish cross, 10p. I got the market lined up. Show me those stocks that were extremely strong when the market was pulling back. Those are the ones that I want to be buying. Now I got the market tailwind. Now I'm going to join that long-term 12-year bull market rally, and I'm going to pick the best stocks to do it with. Stocks like Apple that rallied that entire day, just like I showed you. Stocks like Tesla, as soon as the market found support, these stocks took off. And that's exactly what happened. So your entry point was right here. Look at that. As soon as the market found support, look at that relative strength. Whoosh, gone. See you later. Tesla, same thing. Market coming in, coming in, coming in. The entire time you're watching Tesla, you're going, oh my gosh, tick, 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 tick. Tesla's going higher. This is the stock I want to buy. Put up the SPY overlay. You'll be able to see. Market down, 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 still finding support. Look what Tesla did, moving higher, compressing right here as soon as the market finds that support. Whoosh! See you later. That was the tell. That's why we trade relative strength. So let's get back to the daily chart. I'm going to take this overlay off. Incidentally, I like to keep my charts clean. I don't like a lot of different indicators on them. And we're going to go back into the S&P 500. So yes, day traders should have been passive on the open. Let the market come in. Let's do a little bit of analysis on the market right now because we had a big market decline yesterday. And we knew that the FOMC minutes were pending. And you can see how the market was flat, compressing, 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 waiting for that FOMC statement. There was a clue in the 10p indicator. We had a gigantic drop in it right here. Everything looked good, but it was telling us that there were problems ahead. And when the 10p indicator stays negative the entire day, that is bearish. If it were positive the entire day, that would be bullish. Well, we get a bearish cross here after the FOMC minutes were released, and we have this drop. Well, let me go back to the chat room because I'm going to show you what we discussed in the chat room. So, don't confuse the FOMC statement with the FOMC minutes. This news has been out there. Here's what we know from the last statement, and this is why I feel we could see a negative reaction. This was posted at 12:52. This is 8 minutes before the FOMC minutes were posted. And these were the reasons that I felt that we could see a bearish reaction to it. Because the Fed officials had already told us back in September, very few of them were looking for any rate increases in 2022. All of a sudden, in the December meeting, three Fed officials, or excuse me, the majority of the Fed officials were looking for 3 rate increases in 2022. That is a big change. So you can, in the video, you can view some of these key points. And there's your FOMC minute reaction. See you later. We made a ton of money on that. And if I scroll down, you didn't have to wait long to see the reaction. We were waiting on the sidelines and we nailed it. And I'm going to go up just a little bit here because you can see where I took my short position. It was about 10 minutes after the FOMC statement. And just want to scroll down because I just want you to see that this is actually happening. Short SPY, 11 minutes after the announcement. Sold off. I scaled out of the position, made 24 points on the futures. Now let's talk about price movement and how to read price movement. How did I know that this move was going to have legs? Well, as it's unfolding, I don't know that. But as I take profits, I'm able to evaluate where I think I can get out of the rest of my position. And so here, when you get these long red candles stacked, this is a sign that the trend strength is strong. Now all of a sudden you start getting these tails above body. What does this tell me? These are just dots on a chart, right? Mean nothing. No, it tells you a lot. It tells you that look, tried to rally up, they got whack-a-mole. Rally up, whack-a-mole. Rally up, whack-a-mole, whack-a-mole, whack-a-mole. Sellers are hitting every bid. Normally, when you get a little bit of a pullback like this, if you go on an S&P chart, you get a nice little 15, 20 point S&P pullback, you're going to see a bounce. Not this time, because anybody who was taking profits on their shorts in here was instantly met with selling pressure. So those buyers who are taking profits on their shorts are not doing enough to rally the market because sellers are still nailing it. When you get these tiny little brief pauses that last 15 or 20 minutes and then whoosh, new low, and when the new low is substantially lower than this pause right here, you know that there's a lot of selling pressure. Here's another one, lasted about 10, 15 minutes, and then the next shoe drops. This one, no lift off of that compression, could not get it going up. Tells you that sellers are there. Wham, 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 wham. How many more you got? Wham. How many more you got? Wham. Finally, buyers pull their bids. And then you get the next leg lower. So when you get a pause like this that lasts 30 to 45 minutes, that's a sign of support. You might still have another little leg lower, but it'll be a marginal new low, and you're pretty close to support and release. Understand how to read candles. Very important. I've just shown you on a daily basis and on an intraday basis. What else can I get from the chart? This is critically important analysis. Many of you are just looking at Apple, Tesla. I don't care what else happens in the world. That's all I need to know is what's Apple doing, what's Tesla doing. Wrong. You better get your market bearings down, and you better get them down fast. So, tiny, tiny little bodied candles. There's a new high with a red candle. What happens after that? Good question. Let's go back in time and let's see what happens when we get a red candle off of a new all-time high. There's one. Selling pressure. 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 Are you starting to see a pattern? There's one. Selling pressure. There's one. Selling pressure. See how easy this is? There's one. Selling pressure. There's one. Selling pressure. Selling pressure. Selling pressure. So what does that tell me when I come in today? Oh my God, this is a great buying opportunity. I can't wait to be out there with both hands because every dip should be bought. Not yet. Everything that I've just shown you tells you that there will be follow through. So when I come in today and I'm trying to figure out what my day trading game plan should be, in my mind, I should already know on a longer term basis, I can expect more weakness. Day trading wise, I should probably be favoring the short side. Okay, so if I'm favoring the short side, what would be my ideal pattern that I would look for this morning? What would make Pete the happiest guy around? Well, rally, 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 rally. Not long green candles stacked consecutively. I wouldn't want to see 4 or 5 of those. If they are, then that tells me that support is in and that we're probably going to see a nice reversal of these losses yesterday. No, what Pete's going to be looking for is little bounce, little bounce, little bounce. Tiny little candles, tiny bodied candles suggest resistance to me. Oh, here we go. The move is starting to fade. During this little bounce this morning, I would be able to evaluate stocks and find the ones that are weak relative to the market. They are not moving higher on that market bounce. That tells me that sellers are in there still playing whack-a-mole with them, and that as soon as the market finds resistance, those stocks are going to roll over and they're going to sell off. And I believe the market would sell off in that scenario too, because that's what it's done off of an all-time high following a big red candle. Do you see how the pieces fit together? The market drives all of your decisions, and it starts with the daily chart. Then you drill down to the 5-minute chart, and you need to watch price action. My charts aren't littered with MACD and SMI and Bollinger Bands and the 5,000 other things that people ask me if I have and I use. I don't use it. I use 1OP. I use technical analysis. I watch price action. I put the major moving averages up. I use trend lines. That's it. That's all I need. I just watch price, and I'm very familiar with what these candles are telling me. So it's important for you to develop that skill set. So I've already told you what my favorite scenario would be on a day trading basis. If I see long red candle, long red candle, long red candle today, I already know that price is getting pretty overextended right now just because of this long sell-off, and there's going to be a temptation to rally the market. I also know that I'm in a long-term bull market, so I'm not going to be overly aggressive on the short side. The only time I would want to really be aggressive on the short side is if I get a nice entry point, which would only come off of a rally. So if we start stacking long red candles, I'm not going to be the guy who gets trapped by a massive short covering rally. So I would be very passive if the market starts stacking those red candles as far as my day trading. Then I would probably be inclined, even if I've got to wait 2 or 3 hours for that bottom to form, for that 50-day moving average to be tested, wait for that bullish hammer or that bullish engulf. Then I'll switch gears and try the long side first, see how far that bounce gets, how long it lasts, and then I might look for an entry into some shorts if it still seems that that selling pressure is heavy that way. So you've got to be careful on the short side because you're trading against a weekly chart that looks like this. This is not something that you want to short. Anybody that's tried has been carried out in a body bag. Don't be that guy. If you're shorting it, you got to trade smaller size. You got to be more nimble. Yes, there are lots of opportunities on the short side. Yes, I think we're going to continue to see some selling. Day trading only. Swing trading, we are sitting here waiting for the market to really come in and to test that 50-day moving average and then that 100-day moving average. Put a few trades on here, add here after and only after support has been confirmed. That's where you do it. That candle right there, that's where you do it. You know that that support is in. So let's take a look and see if we can find a couple of decent swing trades to do. So I'm going to go in, I'm going to use my custom search. I got to show you a pretty cool tool. You know, I go in and let's backtrack just for a second. I know it's getting to be a long video, but a lot of good information, so I'm just going to keep it rolling here. You're looking for bullish put spreads, and I've gone through this a bunch of times. So you get it all set up, you got the right stock. Oh my God, this thing looks fantastic, and you get ready to put the trade on. One last thing I had to check to see when the earnings date is. You go, oh no, this company announces earnings in a week. I don't have any options expirations that I can really pick from. So let me make one point. Let me emphasize it twice. Your bullish put spreads need to expire before the earnings announcement date. Your bullish put spreads need to expire before the earnings announcement date. That is critically important because your options are going to retain their value. They're going to retain their option implied volatility if they span that earnings announcement because there's uncertainty. So they must expire before that earnings announcement. And you do not want to hold trades over earnings. So here's a cool feature. We've got earnings announcement date, and I want at least 3 weeks that I can sell some spreads in. So I'm going to go to January 31st, and then I'll pick another date a little bit further out of maybe February 18th or so. Now, these are the companies that are going to give me a few weeks that I can sell these bullish put spreads on. Let's click weekly options. These are the stocks I'm going to be looking for. But I'm not just going to be looking for these randomly. I'm going to add all these favorable variables. So, for instance, I want to make sure that I've got strength versus the S&P on a daily and a 4-hour basis, maybe on a 2-hour basis. Okay, list is getting a little bit smaller. Maybe I want to have a trade signal on a 4-hour and a daily basis. I want to make sure I've got long-term strength. Do you see how easy it is to start finding these stocks and these opportunities? There's another search that you can use, and it's going to be a very powerful one. Imagine if you knew what a stock's tendency was into the earnings announcement. Well, we track this. So I'm going to go into pre-earnings bull, and I'm going to unmark this. These stocks have a tendency to rally into the earnings announcement once they get inside of that 2-week window. So we'll go out to maybe January 28th, and I'm going to click scan, and you'll be able to see the stocks that are coming up. So let me repeat this particular search feature. We've gone back over the last 3 years, the last 12 quarters, and we've looked at a stock's tendency once it gets inside the 2-week window for announcing earnings. More than 75% of the time, these stocks rally into that earnings announcement. That's a really good piece of information. That is additional. That's an additional variable that can help increase my probability of success. Then I go in and I start marking all the other things that would make that trade very attractive. And I'm going to click on Microsoft just randomly. I know Microsoft has a tendency to rally into earnings announcements, but if you look at the daily chart, this is a weak chart. This is not where you would want to be putting a Microsoft bullish put spread on simply on the notion that it rallies into earnings announcements. What you would want to see, multiple support here. Horizontal support, you got the 100-day moving average, you got horizontal breakouts, so lots of good stuff technically, but it's very weak. You would want to see the S&P 500 come in and check that 100-day moving average with Microsoft drifting higher and holding that support. Now that would be a sign of relative strength because the market has fallen and the stock is holding that support level, and you know it's going to rally into earnings. So make sure you got the market support. Make sure Microsoft has some relative strength. But the beauty of the search that I just showed you is that the stock does not have to rally into earnings. It can sit right where it is, and we know that 75% of the time it at least does that or moves higher. Now I know that I've got a decent trade setting up as that stock starts to get closer and closer to that earnings announcement date. So really nice search feature to use. Also, you can make sure to exclude those companies that are going to be announcing earnings soon from your bullish put spread searches. Let's find some bullish put spreads. So I'm going to unmark this, and I'm actually going to mark this one more time, and we're going to go out to the projected earnings date, and we're going to use this January 31st to February 18th, and we're going to run an initial scan, and then we're going to go in and we're going to start looking for relative strength on multiple time frames. Anytime you can use an indicator across multiple time frames, it's always a good thing to do. And I could click through this list and take a look at all of the candidates. Again, all I'm doing is relative strength right now. And I'm sorry about that interruption right there. And so let's move this off screen and let's click through some of these because we want to see charts that are in the upper right hand corner. These are the companies that we want to sell out of the money bullish put spreads. Up here, not down here. These are the stocks that want to race higher. So on any pullback, this 128 level on ABBV looks very, very good. So I'd want to see the stock. Yes, it can pull back with the market, but I want to see it doing so in a stubborn fashion because that tells me tiny bodied candles with the market coming in that it's still got buyers. Then you want to sell that out of the money bullish put spread. I like ABBV. That sets up nicely. Amgen, not bad. Like to see it a little bit higher. It's got resistance at the 200-day, somewhere around the 100-day. Yes, if it pulls back, but that'd be a pretty big pullback given that I'm only looking for maybe another week of softness. Wouldn't pass on that one. Baxter, excellent. You can see a theme here also. Healthcare, right at that $84 level. Get a little bit of a pullback down to this $85 level. You should be able to get an 82.50, 80 bullish put spread off. Try and do it for 50 cents. Take the difference in the strike prices. The credit that I want to receive is going to be the difference in the strike price less the credit received. Then you take the credit received and divide that by your margin requirement. I'm looking for a 25% return on my bullish put spreads. Got to keep the video moving. I'm going to click through a couple of others. Not bad. I love this chart. I like ABBV. I'm not going to go any further. These are the types of stocks that you want to be looking for. I will put that search up one more time. Breakout through horizontal resistance. March, 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 higher. Any pullback in this stock, any possibility of selling that 97.50, 95 bullish put spread on CVS. Check the earnings date, 2/15. Still got a month plus to get some decent bullish put spreads off. Wait for that market to come in. Hits the 50-day moving average. This stock pulls back a little bit, selling out of the money bullish put spread. Or if you get that second wave of selling down to the 100-day, hopefully the stock will come in a little bit further so that you can distance yourself from the action. CVS, I love it. ABBV, I love it. If I went through this list and looked at some of the other stocks in here, they're going to set up very, very well for some bullish trades, bullish put spreads. Final thing that we want to do. Very quickly, I've got to see if there's anything that looks good. Netflix through the 200-day moving average would be a good short. You can see through that horizontal support there down to the 200-day closing on its low, a little bit ahead of itself. Let's see if we can find something better. I'm just clicking through. Oh, Adobe, that was a big horizontal breakdown right there. Adobe, super, super weak. Zoom out, take a look at that chart. Yes, that's going to be a stock that I would definitely be looking for it to resume its sell-off. Let's go back into the normal chart. These are the stocks you want to be shorting. They're down here. They're in the lower right-hand corner. For what? For day trading. Pete told me, market's going to come in for another few days, maybe another week. I got to be careful on the short side because we're in a 12-year bull market rally. Only day traders should attempt shorting. Intraday should not be shorting overnight. Market's going to be bouncing off the 50-day or the 100-day. Got to be super careful. Got to wait for that little bounce this morning. That failed bounce, once it starts to run out of steam, I'm looking for stocks like this. Oh my gosh, they look weak relative to the market. That's your window of opportunity today on the short side. So, swing traders, be patient. Your time is coming. You're going to have an opportunity to sell some nice out of the money bullish put spreads in the next week or so. Wait for that market support and know that into earnings season, which starts in about a week or so, you're going to see buyers engaged. We tend to rally into earnings season, and that rally and that strength tends to hold until the big tech names like Apple, Google, Facebook have announced. So you should have a nice market tailwind for a few more weeks. The rest of the year, we can expect some volatility as the Fed starts to increase interest rates. There's a lot of information in the video today. You might want to give it a couple of different views. Please leave your comments in the comments section. Leave your questions. I will respond. Good luck with your trading. 2022 is going to be a fantastic year. Don't take your eye off of the ball. If you learn nothing else from me, learn that you need to start your analysis with the market on a longer term basis, drill down to a short term basis. That is what drives your trading decisions. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.